Good afternoon, good evening, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for January 11th, 2009. AccendoTraders.com, effective video, technical analysis trade plans delivered daily. Each time we come together, we try to make a trade plan for the next trading session so that we're prepared and we have a plan and we trade that plan. On the weekend, we add a couple things to make sure that we're seeing where the market may be going as far as trends. We also want to look at some of the blogs and newsletters out there to get some of their expert advice. Check the sectors to see if any of the sectors are beginning to make a move one way or the other. We always check the major indexes and scan for new trades and set alerts for the new trades. But most importantly, by having a trade plan, we have time to release and spend with our family. So when we look at last week, all the major indexes ended down for the week. And, you know, if you were here last week and watched our video last week, you saw that we were up it was the first time in a long time we said we were up for the year, and that quickly we are now down for the year. I know it's only the second week, but we only had 1 week up. So that means we have the same old, same old. The negative news is continuing. Starting off with the week started off with the auto sales, and GM and Ford both obviously dropped huge for the week, basically a third. According to ADP on Wednesday, the private employers slashed 693,000 jobs in December. That is 200,000 more than what was anticipated. And then that was confirmed on Friday by the non-farm payrolls, which dropped 524,000. And that brings our total for 2008 of 2.6 million jobs lost. 2.6 million jobs. And also on Friday, we saw that the unemployment rate jumped to 7.2%. They were hoping for 7, but it jumped to 7.2%. And that is a 16-year high. We had several major companies issuing warnings or cutting jobs this week. Alcoa cut its workforce by 13,000. Intel lowered its fourth quarter revenue. Walmart same stores came in low. Best Buy same store numbers came in low. So again, you know, a lot of this negative news is back. And what we were hoping was that that we have already priced in this negative news as earnings seasons kick in this week. The fourth quarter earnings season begins this week with Alcoa. A lot of people were hoping that the market had already priced in negative results, but it's looking like the market has not, and we may go lower. The other thing we had that's not up here, but we had oil actually have huge swings. At one point, it was up to $46.34, but they ended up being down 12% for the week, down to $40. So huge swings in oil, and certainly the turmoil going on in the Middle East has to do with that. And I'm continuing to put up here this, more details about the Ponzi scandal. And the only reason I bring that up is this week another Ponzi scandal was found in Philadelphia. Last week we talked about a new one affecting Haitian investors, and now this week there's a new one that they found in Philadelphia. And then also this week, one of the Indian companies announced that their numbers were made up. So it's just interesting to see that, you know, this may be bigger than what was really thought. And of course, you know, how many people are being affected by this and their money's being gone. No economic data coming out on Monday, Tuesday, Treasury budget. Nothing really big this week that's going to move the market one way or the other huge. Maybe initial claims might have something to do. But again, I think with the earnings season kicking off with Alcoa tomorrow, even though we really don't have anything that big this week, Merrill Lynch, Intel, traders are really going to, again, try to show their sentiment by bringing some volume back into the market, and we'll see which way to push it. Okay, so we wanted to go ahead and just once again remind you that we were going to be using Twitter in 2009 here, twitter.com/Accendo Traders, and you can see that what we're providing for you in the Twitter account are intraday market information, market moving news. We're also providing you market breadth information about the NYSE and the NASDAQ. Pivot points for each day, we're providing that for you also. And again, market news that are coming out, um, economic data that's coming out, anything that's going to be moving the market, that type of information is going to be posted here. So again, to help you trade, make your trades each day, this type of intraday information will be provided to you via Twitter for free. And obviously some input from me. And we're going to be using this a lot as part of our 30-day challenge that we're going to start in February. Okay, so I'm doing things a little bit different for our introductory video. This is, of course, our free video that we're going to put out now on Saturdays. This is our Saturday video, the free portion. It does not have our plays. That's going to be in the evening version for Sunday. On the weekends, they're free. And obviously, we'd love for you to be a paid member for our daily video. Normally, I would be going to our sectors, but I'm going to take a quick moment and talk about our indexes. And here's the S&P 500. And one of the things we talked about is where's the volume. So yes, we moved above the 50, but it was under no volume. And now that the volume's somewhat returning, the market has come down. Even with the bad news, it is still important that as volume is returning, we came back down. And where have we come back down to? Well, here's the low of November, and as we bring it right on up to where we are now, you can see we're sitting right here on the cusp. And when we look at some of our indicators, we're getting ready to break the mobile bands to the downside. Look at our time segmented volume. You can see that's pointing to the downside. Same thing here with the NASDAQ. Uptrend line, time segmented volume pulling down. Looks like it's getting ready to break through to the downside. And then if you look at the Dow Jones, you can see that we're already through this uptrend line from the lows of November. And same thing with the time segment volume all pointing down. So with little economic news this week, the traders are going to be able to, again, bring their volume and bring their market sentiment. Okay, and as we go to our educational portion of our video, we're using the book Trading in the Zone by Mark Douglas. And we are on the chapter 5, The Dynamics of Perception. And he goes on to say that the process of trading starts with perceiving an opportunity. And if you can't perceive the opportunity, then why would you trade? Think about the first time you ever looked at a price chart. And I'm going to spin out a little bit. And remember, my friend Lydia, she was sharing with me some of the things from Dave Elliott and his time segmented volume and some of the things he was doing. And the first time she showed it to me, I was like, what in the world is on that chart? You know, because it just didn't make any sense to me. There's so much going on. Anybody who's ever seen a Dave Elliott chart with his snapbacks and up and down and his mobile bands, I mean, he's got lines all over the place. And the first time I looked at it, I was like, oh my goodness, what in the world is going on there? But as I took the time to learn about it and she shared more about it, now I look at the chart and I get it, So even with experienced traders, as you learn new things, the first time you look at it, you're like, what the heck is going on? So you don't perceive, the value maybe in the technical indicator, or you don't see the uptrend or the downtrend or what's going on with the price action until you take the time to educate yourself about these technical indicators and the price action of volume and support and resistance. It looks like you just have a bunch of lines or candlesticks or squares or, just look like a bunch of information. That's one of the reasons why they always say that accountants and someone like my brother who's a thinker but who likes to keep things controlled, they say those people have trouble with trading because they don't perceive everything yet. Because a lot of trading is about emotion, it's about past behavior, it's about relationships. So in order to be a trader, you have to see the opportunity. And in order to see the opportunity, you A, have to have the information, and B, have to have the discipline and the right mindset to act upon what you see. Once you see, you have to see it, you got to have market knowledge, and then you have to have the right mindset to act upon what you see. And that's what our trade plans are all about. So I want to thank everybody for watching. Depending on which version you're watching, our YouTube folks, this is just our 10-minute version. You need to go download the full version at Subscribe Podcast HTML. That's got our trades for the week. It's got more information about the market index as a whole. And as you know, on Sundays during the weekend, we put out our free version. But to get the rest of the versions, Monday through Thursday, you got to be a paid member. So that's accendotraders.com/video.html. If you've been watching for a while, you know how effective and how detailed we are with our videos. Check out our blog. We'll put our free version on the blog also. We have some great articles there on price action. And again, in 2009, we're using Twitter to put out some intraday market information. And in February, we're going to be doing some things with the 30-day challenge and with the diamonds. But we're already putting out information as I showed you earlier. So thanks, guys, and I will see you next time.